Swayam Prabha. Digital India. Educated India.
You see, first of all, you know that there are five heads of income. These are salary, house income from salary, income from house property, then income from business or profession. Then the second last is capital gain, and the residuary head, that is the last head, is income from other sources. Now, when the income tax return is filed by the assessee, first of all, income tax return is filed, and each and everything regarding the income earned, regarding various other matters, that is written in the income tax, that is depicted in the income tax return, and that is submitted. And then it is the duty of the income tax department to process the return, and it's to verify, to assess, to verify its correctness. You kindly note that this process of examining the income tax return by the income tax department, basically it is known as assessment. And in this word, that is under the word assessment, it includes reassessment as well as best judgment assessment, that is conducted under section 144. We will be discussing these one by one. So first of all, what are the various types of assessment? Various types of assessments are there, and I am going to discuss these one by one. Now, the first of all, the basic type of assessment, that is self-assessment. It is basically self-assessment, and the section, you see section 140A, 140A of Income Tax Act 1961 deals with self-assessment. Now, what is self-assessment? Assessee, when assessee earns some income, earns something. So first of all, what is there in self-assessment? Assessee himself, self means himself. Assessee himself, you may say, assesses his tax liability on the income earned by him during the particular previous year, and accordingly he submits the required income tax return. Various forms are there, and he will see which type of income tax return is applicable to him, and that will be submitted by him. Kindly note that returns are submitted, return of income is submitted under section 139, or it may be various other sections may be there, but simple, it is filed under 139, that is section 139. So let us suppose that income tax return has been filed, and he has considered various incomes, various heads, and various exemptions available, various deductions, and on the basis of these various relief, of course, everything, and on the basis of that, he has basically found out what is the tax payable, what is the total tax payable by the assessee, and then ultimately he will be deducting from that amount. Which in case some tax has already been paid, in case some TDS is there, TDS means tax deducted at source, in case some TCS is there, tax collected at source, and you see from 1st of October 2020, various changes have been made in as far as the provisions relating to TCS are concerned, and then any relief of tax under section 1991, in case some such sort of relief is there, that will also be considered, and in case some other sort of relief is there, so that will also be considered. Similarly, in case some tax credit is there, in case some other sort of relief, that is basic relief under section 89 is there, so it will be adjusted. And and in case assessee has filed the return, you may say after the due date, and there is a delay in the furnishing of return of income. In that case, he is liable to pay interest for such a delay, and it will be charged accordingly. That is as per the provisions of section 234, section 234F. So kindly note that what is self-assessment? Self-assessment is basically assessment by the individual himself, assessment by the assessee himself. So it is basically self-assessment. It is done before filing his income tax return. So when in case your self-assessment is very effective, you have taken into consideration various provisions, and there is no you have mentioned, you have taken into account all the formalities have been completed. In that case, the work of income tax department will become very easy. So kindly note that. Then second is summary assessment. Second type of assessment is summary assessment. Now, what is summary assessment? What is summary assessment? Kindly note that the return has been filed by the assessee. Return has been filed by the assessee, and uh, what is there in summary assessment? In summary assessment, it will be checked in brief. It will preliminary checking will be there as far as income tax return is concerned, and it is the assessment without calling the assessee. While doing summary assessment, assessee is not called. Assessee is not, you may say, invited to the office of the income tax officer, and mainly no human intervention is there. No human intervention is generally there. And what is there? What is there? Processing under section 143 be mandated before assessment. And in case you should also note that no detailed scrutiny of income tax return is carried out, but these types of things, these types of issues are basically considered. Now, what are these issues? Kindly note, in case in case some arithmetical error is there, in case some arithmetical error is there in the return, so it may be modified, it may be there. Similarly, secondly, when some incorrect claim is there, when some incorrect claim is there, and it is clear from the information given in the return, it is clear from the data filed in the return that such a claim is incorrect. It is very much evident, it is crystal clear. In that case, some adjustment may be made. Then third, in case some loss has been claimed, but it is to be disallowed. It is to be disallowed. So in order to disallow the loss claimed, then in that case, in order to do such kind of adjustment, again, such thing may be there. Again, summary assessment may be there. Something it may be there that the return of the previous year for which set of loss is claimed was furnished beyond the date. Beyond it is being submitted after the due date, and let us suppose now no claim is available as per the provisions of the act. So in that sort, again some adjustment may be made under summary assessment. Then it may be relating to disallowance of expenditure indicated in the audit report, but that has not been taken into account while finalizing the total income in the return being considered. Then after that it may be relating to deduction claimed under section 10AA, 80IA or 80IE. So these must be kept in mind. And sometimes it may be there. I think you are aware, you are very much aware regarding Form 26AS. You are very much aware, I suppose so. What is Form 26AS? So sometimes it may be there that some income is there, income is being shown in form number 26 AS, but that has not been considered, that has not been, you may say, considered by the assessee while computing his total income. In the and while furnishing the return, he or she has ignored such income that is already there, that is being depicted in the form 26 AS. So it is to be in again in such case adjustment will be made. But one thing must be kept in mind that such adjustment such adjustment can be made only after once its intimation has been given to the assessee. The intimation may be in writing or it may also be given in electronic mode, e mode, that is sufficient. But no such adjustment can be made unless an intimation to this regard has been given to the assessee regarding such adjustment. Or notice may be in writing or it may even in through electronic mode. So that must be noted. Now, when it has been found that some adjustment is needed out of various adjustments, out of various issues which I have just discussed with you, then intimation will be sent, as I have already told you. It may be sent through in writing form or it may be sent through electronic mode. So intimation will be given. It will show basically it will show the comparative income tax computation. In the first column, it will depict the tax computation as provided by the assessee, and on the other column, it may be as per the applicable provision, as per section 143(1). So it must be there. It must be noticed that in case some tax liability is there, in that case this notice will serve the purpose of a demand notice itself. Once some recovery is to be made, once some tax is to be collected, then in that case it will act as a demand notice also. And again it should be noted that intimation for tax or interest due, such intimation shall be sent within 1 year from the end of the financial year in which return of income is made. So it should be kept in mind. From the end of 1 year, from the end of within 1 year from the end of the financial year in which return of income is made. Now, again it should be noticed that processing of a return is not necessary. Where a notice has been issued to the assessee under section 143(2), subsection 2. Now I think the difference is clear to you. But again one thing is there. Before making an assessment under section 143 subsection 3, the return shall be processed under 143 subsection 1. So these must be kept in mind. Third type of assessment, that is scrutiny assessment or regular assessment. You should note that not each and every return, not each and every filed ITR, income tax return, is picked up for scrutiny. It is not so. You should note that again, what is as per the data, recent data, number of scrutiny cases have dropped to 0.25% in financial year 18-19 from 0.71% in financial year 2015-16. So this is the ratio. And what are the reasons of this? The data has dropped. Cases picked up for scrutiny have dropped. The main reason may be due to the effective data management. It may be due thanks to IT, thanks to information technology, thanks to data mining. Due to that, I think due to that, each and every information regarding an assessee is already available with income tax department. So that is why I think it may be one of the strong reasons. So kindly note, and what are the provisions regarding, what are the time limit regarding, you may say, picking up some ITR for scrutiny. Kindly note, it is up to 6 months from the end of the financial year in which return was filed. Let us suppose, in case you had filed your return on 31st July for the financial year 2018-19, assessment year 2019-20. Then in that case, the notice may be issued by the income tax department up to 6 months from the 31st of March, that is up to 30th of September 2020. And after that, no notice. After that, department can't issue notice regarding that. So it should be noted, it should be remembered. And when the income tax department selects some ITR, they pick up some income tax return for scrutiny. Again, for that, notice could be given to the assessee under section 143(2), section 143 subsection 2 of the Act. Act means obviously Income Tax Act 1961. That in case assessee has made, in case ITR has been filed by the assessee as per section 139 or in response to section 142, then what will happen in this case? In this case, it will be checked thoroughly, and it would be checked that assessee has stated his income in a proper way. No understatement of income is there, and no excessive losses are there, and nothing of that sort is there. So it should be kept in mind, and some date may be fixed, and assessee may be asked to attend the office of ITO. He may be asked to come personally, or some agent or some authorized person may attend, and he or she may be asked to produce the required documents in support of the particulars shown in the ITR. Again, dear students, kindly note that as far as the procedure for this assessment, that is scrutiny assessment or regular assessment, is concerned, what will be the procedure? Kindly note that first of all, the assessee will be producing the documents or some evidence that are required by the assessing officer. You see, assessing officer may ask the assessee to provide, to submit some additional record, and it will be the duty of the assessee to provide those documents, and it will be the duty of the assessee to satisfy the assessing officer. And after taking into account each and every document, each and every you may say explanation, justification, reply given by the assessee, then assessing officer will be issuing an order in writing, making the assessment of the total income or total losses of the assessee. And in this way, he will be determining the sum payable by him, or in case something is fundable to him, then in that case it will be computed. You see, it is a beauty of a regular assessment that it may result in some payable by the assessee, or it may even result in some amount refundable to the assessee. But as you know, it is not so as far as the provisions of best judgment assessment are concerned. In that case, no refund can be given, no refund can be there as per the provisions of best judgment assessment under section 144. Now let us move further. So now you see one recent amendment is there, one recent, you may say, noting is there that very recently by the Finance Act in 2018, a new subsection, that is subsection 3A, it has been inserted, it has been included in section 143, and it deals with that central government may make a scheme of for making assessment in order to have greater efficiency, transparency and accountability. So, what is the purpose of it? It may be there, it may be, you may say, there in order to eliminate what is the purpose of e-assessment we are talking of? That is e-assessment, electronic assessment. These type of assessments may be there in order to eliminate the interface between the assessing officer and the assessee in the course of proceeding to the extent it is technologically feasible. Second objective of e-assessments is to optimize utilization of the resources. You see, resources are always limited. So it is a duty of the government, and being a responsible citizen, it is our duty also to help the government in optimizing to make optimum utilization of the limited resources, and it may be through economies of scale and various functional specialization. Another main objective may be to have team-based assessment with dynamic jurisdiction. So kindly note that now this concept of e-assessment is also gaining ground. But you must keep in mind, dear students, that except search-related assessments, various other types of scrutiny assessments, various other types of regular assessments, you may say, they shall be conducted only through e-processing functionality available at e-filing website of the department, that is Income Tax Department. Okay. Then, dear students, now let us discuss what is a best judgment assessment. So kindly note section 144 of the Income Tax Act 1961 deals with a best judgment assessment. So what are the cases and what are the various implications of best judgment assessment? We will be just discussing. So now let us assume that some scrutiny notice was issued to a person. That was some notice was given, and that fellow, that person, you may say that assessee has not complied with the notice. He has failed in complying with the scrutiny notice. In that case, the assessing officer can can resort to best judgment assessment, and it is it is conducted under section 144 of the Income Tax Act 1961. So it should be kept in mind. Then in that case, what would be the procedure? What would be, you may say, done? In that case, the assessing officer will be computing the income of the assessee. He will be computing the income of the taxpayer based upon his best judgment. So he will be deciding to the best of his judgment, and it should be kept in mind. And it is quite possible that in such cases, in case of best judgment assessment, a higher taxable income is assessed. Higher income may be assessed vis-a-vis the income reported by the assessee in the tax return, and it may result in additional tax and even additional interest payable by the assessee. So one thing is clear, that we should cooperate with the orders, with the notices issued by the Income Tax Department. In case we are not complying with that notice, even you see we are discussing the AO may go for best judgment assessment. One thing more you should keep in mind, my dear students, that after collecting a relevant material, relating to that particular case, and after giving an opportunity of being heard to the assessee. Then after that, assessing officer will be, you may say, completing his procedural aspect, and he will be completing his best judgment assessment, and he will be determining the amount payable by such assessee. But one thing you must keep in mind, and that is very much significant, that the assessing officer can't grant refund under section 144. So it must be kept in mind. He may ask for additional payment. You may say he may do the assessment, and he may determine the amount to be paid by the assessee. But he can't can't grant refund under section 144. It must be remembered. Then before starting the procedure under best judgment assessment, a show cause notice should be issued to the assessee, should be given to the assessee. But kindly note that in case some notice under section 142 1 has already been issued by the assessing officer, and assessee has not replied to that notice, and assessee has not complied with that notice. In that case, no new notice needs to be given. In that case, the AO is empowered to, the assessing officer is empowered to commence the proceedings of best judgment assessment, even without giving some further notice. So that is that notice already given under section 142A, that is sufficient. That will suffice the matter. So it should be noted. And one thing more should be kept in mind, that in case of best judgment assessment, as per the provisions of Income Tax Act, the assessing officer, the AO, cannot assess the income below the income already mentioned by the assessee in the in the return, and he can't assess the losses higher than the losses shown by the assessee in his return. So it should be remembered. It was not so, I think as it was not so in case of the earlier assessment, that was scrutiny or regular assessment. So that is why, due to this reason, no refund can be granted under section 144 under best judgment assessment. So once again, I'm just giving you an idea in brief, that when you are fully cooperating, then it is okay. When a person fails to make return under section 139(1), or he has not made a return or a revised return under section 139(4), subsection 4 or 5, or when he is not complying with the notice already issued to him under section 142 subsection 1, or in case some directions have been given to the assessee for getting his or her accounts audited under section 142 2A, directions have been given, but assessee again omits that, and assessee again fails to comply with those directions. And again, when any person has made a return, it is not so that he has not made a return, but he fails to comply with the notice issued to the assessee under section 143 subsection 2. So in these cases, best judgment assessment may be made. So it should be noted. One thing more, that sometimes accounts books are there, account books are there, but still assessing officer is empowered to reject those accounts books under section 145 and continue with and start the proceedings of best judgment assessment under section 144. Now, what are those cases in which, you may say, account books may be rejected, and the assessing officer may commence the proceedings under best judgment assessment. So kindly note, four situations may be there. First one is when account books are incorrect. In the eyes of the assessing officer, thinks that the account books are incorrect, account books are false, or even when he feels that the account books are not complete, rather these are incomplete. So first case is this only. And secondly, when the assessing officer is of the opinion, when the assessing officer feels that the accounting method that is being used by the assessee, the accounting method that is being employed by the assessee is such that by using that particular accounting method, we can't find out the true amount of profit. So in case the assessing officer feels that the accounting method that has been employed by the assessee, that will not reveal the true and fair amount of profit. In that case also, such account books of the assessee may be rejected by the assessing officer, and he will be going for best judgment assessment under section 144. Now third method. You see, you may say various concepts and conventions are there in accounting. And one such convention is of consistency, that says that once one particular method has been adopted by the assessee, it should be continuously used by the assessee over a period of time. Always it should be used. And in case it is found that the accounting adopted by the assessee has not been followed by him regularly, and income has not been computed as per the accounting standards, notified accounting standards. In that case also, the assessing officer may reject the account books and make the best judgment assessment under section 144. And finally, fourth ground may be when the assessing officer feels, when the assessing officer is of the opinion that the assessee has not followed the income computation and disclosure standards which have been duly notified by the government. So in this case also, he may reject the account books of the assessee and may start the proceedings under section 144 regarding best judgment assessment. So now, my dear students, we are moving to the next type of assessment. Basically, it is income escaping assessment, or it is also known as a reassessment. Kindly note the its, you may say, title, its heading. And kindly note, section 147 deals with that. Section 147 deals with that. So let us start. Let us try to learn what is reassessment, what is income escaping assessment. Once again, you should note that in case the assessing officer has reasons to believe, and such reasons are concrete reasons, not just based upon some guesswork, or not just based upon some rumors, rather on some concrete grounds, on some solid reasons, on some solid grounds, you may say, the assessing officer has reasons to believe that any income which was chargeable to tax has escaped assessment for any assessment year, then he may, subject to the provisions of section 148 to 153, he may assess or reassess the income which has escaped assessment, or he may even recompute the loss or the depreciation allowance or any other allowance which he thinks, as the case may be, for the relevant assessment year. And it is, what is there? then in that case, one question may be there in your mind, that we are having best judgment assessment, we are having regular assessment, then why we are using this particular type of assessment? So students kindly note that under that type of assessments, some ruling is there, some time limit is there. That is from the end of the assessment year, within 2 years from the end of the assessment year. So let us see in now that time limit is over, and something is now something is unearthed by the something comes into the notice of income tax department, or that is assessing officer. Then in that case, section 147 may be successfully applied by the assessing officer or the income tax department. Now what will be done? Kindly note, in this case, first of all, a notice will be sent to the assessee, and he will be asked to furnish some details within the stipulated time period, and some this time period will be mentioned in the notice. So that will be there, that he will be uh, each and everything will be clearly mentioned in that notice. And what will be the next point? Kindly note that in case of summary assessment, or in case of a reassessment, means we are going for that, it may be made for, you should note that it should be no action shall be taken under this section after the expiry of 4 years. So again, some time limit is there, that it can be started, it can be commenced before up to within 4 years from the end of the relevant assessment year. So it should be kept in mind. But in some special cases, it may extend to 6 years, and when again in some special circumstances, it may even go for 16 years. It was also there. So kindly note that. So still we are going for that. We are studying it in basic form. When it is found that some income has escaped assessment for any earlier assessment year, in that case, assessing officer may go for income escaping assessment or reassessment. So it should be noted, and he may assess or reassess such income, but other than the income, involving the matters which are already under, which are the subject matters of some appeal, some reference, some revision, which is chargeable to tax and has escaped assessment. Means new. We are talking of new one. That is some part that is already under appeal, reference, or revision. That should be excluded. We are talking of the remaining part. But again, once again, the assessing officer, before making assessment under section 147, that is reassessment or income escaping assessment, he will have to issue one notice under section 148 to the assessee, and he will ask the assessee to file the return. If he has filed the return, if he has filed the return under section 139 or 142 1, so it should be noted that assessing officer should issue one notice to him to file the return, as even if kindly note that it is not so that return was already filed. Even if he has already filed the return, still he will be asked to file it. Now you may ask that what may be the cases when it is when it is felt that income chargeable to tax has escaped assessment. So kindly note, various cases are there, and I am trying to discuss with you in brief. First, in case it is found that the income of the assessee was above the maximum limit, that is up to which there is no need to file the return. So kindly note that he was required to file the return, as his income had exceeded the maximum, you may say maximum amount that is not chargeable to tax. But the assessee has failed in filing the return. So first case is this. Now second is the return of income was filed by the assessee. It is true that assessee has filed the income tax return, but no assessment was made. And it has been noticed by the AO, or assessing officer feels he is of the opinion that the income has been understated by the assessee, or he has claimed excessive losses, excessive deductions, excessive allowances, undue allowances, or undue relief in the return. Even in this case, a reassessment may be there, or income is these cases are deemed to be cases when it is believed, it is deemed that income chargeable to tax has escaped assessment. Now, in case in case some international transaction is there under section 92E, some report is required to be furnished. Some report in that regard is required to be submitted by the assessee to the income tax department. But in case the assessee fails to submit such a report, again in that case it will be assumed this case will deemed to be the case where income chargeable to tax has escaped assessment. Again, the fourth case may be when income tax, when the assessing officer believes that the assessment has been made, but in that assessment, income that was chargeable to tax has been underassessed, or some lower rate of tax has been applied, or some more relief was given to assessee. He has claimed excessive loss, excessive depreciation that was not due to him. That was not due to him as per the norms. Then again, when it is felt, when it is the assessing officer is of the opinion that a return of income has not been furnished by the assessee, or when it is felt that the return of income has been felt by him, and on the basis of information or on the basis of document received from the prescribed income tax authority under section 133C subsection 2, it is noticed by the assessing officer that, as again I am telling you, these have been already discussed also, that the income of the assessee exceeds the maximum amount not chargeable to tax, or the assessee has understated the income, or has claimed excessive loss, deduction, allowance, or relief in the return. And lastly, when a person is found to have any asset located outside India, so, he may be having some asset, or he may be having financial interest in any entity located outside India. It is also a sufficient ground, a reasonable ground to deem that some income chargeable to tax has escaped assessment. Now the next part is protective assessment. Protective assessment. Kindly note that in such kind of assessment, what is there? What is the theme of such assessment? You see, the income tax authorities are just making an assessment until and unless the matter is finally decided as to who is really liable to pay tax. So it is some sort of, you may say, provisional type of assessment, that for the time being, income tax authorities are just making an assessment until the matter is decided. Till the matter is going on, it is not decided that who will really be liable to pay tax. Then a protective order of assessment of tax liability can be passed, but not an order of penalty. Means in such cases, in such doubtful cases, protective order, as far as assessment is concerned, we may go for, the income tax department may go for protective orders. But as far as penal provisions are concerned, as far as penalty is concerned, then in that case, no protective order may be passed in case of penalty. and similarly, and similarly, protective orders for recovery, protective orders for recovery are also not permissible. You can't make any protective order for recovery. It should also be kept in mind. Now, the last category, that is assessment in case of search or requisition. Section 153A of Income Tax Act 1961 deals with that. My dear students, kindly note that we have already studied the provision relating to search, seizure, and survey. We have already discussed these provisions in detail. Some search was initiated, you may say, against some person, and or it some recognition was there. I think you are well aware that section 32 deals with that, and section 32A deals with recognition. In that case, what is there? Let us suppose that it is conducted after 31st of May 2003. The assessing officer will assess or reassess the income of 6 assessment years immediately preceding the assessment years. 6 years immediately preceding the assessment year relevant to the previous year in which such search was conducted under section 132, or in which such requisition was made under section 132A. So we will be assessing or reassessing the total income of 6 assessment years immediately preceding the assessment year relevant to the previous year, when such search was conducted under section 132, or when such requisition was made under section 132A. So this was all from my side as far as provisions relating to assessment and reassessment are concerned.